Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is how much can an LLC contribute to a solo 401k? Give me a moment here while I check our volume here. Okay, it looks like our volume is working. If you run your business through an LLC and want to cut your taxes while supercharging your retirement savings, this one's for you. Because today we are breaking down exactly how much your LLC can contribute to a solo 401k. And it's a lot more than most small business owners realize. This is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Chat them over now so that we can be sure to get to them all. Let's get started. I see we already have some questions here. Let's take a look at those here. So here's a question. I'm trying to make my 2025 contributions. I will be contributing $23,000 as an employer match into pre-tax bucket. Can my employee contribute? Can my employee contribution of $23,500 be contributed into the voluntary after tax? Great question. So yes, employee contributions can be applied as pre-tax contributions, Roth contributions, or as voluntary after-tax contributions. And the voluntary after-tax contribution is part of the mega backdoor Roth strategy. So that's a strategy whereby, let me pull up that slide here, whereby you make a contribution to your voluntary after-tax solo 401k bucket, and then you turn around and convert that over to the Roth solo 401k or the Roth IRA. So you would make it into this bucket right here, the one labeled after-tax. So yes, you can choose to make voluntary after-tax solo 401k contributions instead of employee contributions, or even instead of employer contributions. So that's great. That's what's great about the voluntary after-tax solo 401k is that it's a dollar for dollar calculation. It's not percentage based like the employer contribution. Therefore, if you have enough net self-employment income from your business, you could make it into the voluntary after-tax solo 401k bucket and then convert it to the Roth solo 401k bucket. So a good question. All right, let's take a look at the next question. What are the deadlines to contribute to the solo 401k and perform mega backdoor Roth conversion for 2025 tax year? Good question. So we've got two different regulations here. We've got the contribution rules, which have their own deadlines. We also have the voluntary after-tax solo 401k contributions as part of the mega backdoor Roth, which also have their own rules. So from the contribution perspective, here's a good chart here. Let me pull this up here. Give me a moment here. Here's a good chart here that breaks down the contribution deadlines. So for tax year 2025, you still have plenty of time to make contributions for 2025. As a matter of fact, you have all the way up until year 2026 to make your 2025 contributions, which is driven by how your self-employed business is taxed. And we're going to dig deeper into this a little bit later. But in short, if you look at this chart here, if we look at the one for a sole proprietorship or an LLC taxes and sole proprietorship, you're going to have until April 15 of 2026 to make all contributions to a solo 401k plan for tax year 2025. That's true whether you're making employee contributions, employer contributions, or even voluntary after-tax solo 401k contributions. What is more, if you file for a timely tax return extension, you're going to have until October 15 of 2026 to make contributions to the solo 401k plan for tax year 2025 if you're self-employed business established in a sole proprietorship. Now, regarding conversions as part of the mega backdoor Roth, those have different deadlines. Keep in mind that conversions are taxed in the year that the contribution is made and then converted to the Roth solo 401k. So, for example, here in 2025, if you make a voluntary after-tax solo 401k contribution here in 2025 for tax year 2025, and you convert that this year in 2025 by December 31st of 2025 to the Roth solo 401k or the Roth IRA, that's going to count as a 2025 year conversion. Now you can convert it in 2026 instead. Let's say you wait until 2026 to make your 2025 contribution. Well, it'll count as a 2025 year contribution. You convert it in 2026, so it'll be taxable. Excuse me, it'll be reported as a conversion in 2026. If it's a voluntary after-tax solo 401k contribution that's being converted to the Roth solo 401k or the Roth IRA, it's not going to have any tax impact whether it's reported as being converted in 2025 or in 2026, because voluntary after-tax solo 401k contributions are made with after-tax funds, and therefore when they get converted, even though it's reportable on a Form 1099-R, that basis, you've already paid taxes on the basis, the contribution. Therefore, that contribution is not going to be taxable. Yes, there might be some small gains, depending on when you convert it. Most clients convert that contribution right away, but if any interest accrued, typically a few dollars, and that gets converted over to the Roth solo 401k or the Roth IRA, then only those earnings will be taxable, but it'll get reported on a Form 1099-R for tax year 2026 if it gets converted in 2026. If you convert that voluntary after-tax solo 401k contribution in 2025, then it'll get reported on a year 2025 Form 1099-R. So in short, contributions deadlines are different than the conversion deadlines as well as reporting. Good question. And we've done webinars on this topic in the past, by the way. So if you subscribe to our YouTube channel, you can receive notifications regarding when we go live, and you can also access our video catalog. All right, let's see if we have any other questions here. Will this be just for LLC? Well, you can ask questions regarding any topics surrounding solo 401k plans. Today's topic is regarding how much can an LLC contribute to a solo 401k, but you don't have, but you can ask your questions regarding any aspect about solo 401ks, self-directed IRAs, and even traditional 401k plans. Okay. I had a different topic. Well, go ahead and shoot over your questions. Let's see, another question here. I assume my goal is to maximize what's in my Roth. Is it easier to skip the employee and the employer contribution, just do the after-tax contribution of up to 70,000? Then after contributing, I can roll it right into my existing or regular Roth IRA? Great question. So in a nutshell, you are correct. And I touched on this a little bit already. You are not required to make employer contributions or employee contributions, and therefore you can forego those contributions and solely make voluntary after-tax solo 401k contributions as part of the mega backdoor Roth strategy. The mega backdoor Roth strategy entails making contributions to the voluntary after-tax solo 401k bucket, and it's a dollar for dollar calculation. For example, if your self-employed business is an LLC taxed as an S corporation or even an S corporation, your self-employment income is going to be based on your W-2 wages from that self-employed LLC taxed as an S corporation. As a result, you just need to pay yourself a total of $70,000 of W-2 Box 1 gross wages for tax year 2025. And you can contribute that entire $70,000 to the voluntary after-tax solo 401k bucket, and then turn around and convert it to the Roth solo 401k or the Roth IRA. And then after that, If you're age 50 or older, if you also pay yourself an additional $7,500 of W-2 wages, so a total of $77,500, you could do a catch-up contribution of $7,500 to the Roth Solo 401k. Now, if you're age 60, 61, 62, or 63, you qualify for a catch-up contribution of $11,250. So if you add $11,250 to 70,000, that's what, $81,250. So if you pay yourself $81,250 of W-2 wages from your S corp, you can contribute $70,000 to the voluntary after-tax solo 401k bucket, convert it to the Roth Solo 401k or the Roth IRA, and then the catch-up amount of $11,250 will get deposited to the Roth Solo 401k bucket, for example. It's important to note that catch-up contributions can never be deposited to the voluntary after-tax solo 401k bucket as part of the mega backdoor Roth strategy. Only the overall contribution limit of $70,000, which is the overall limit for tax year 2020, can be applied as a voluntary after-tax solo 401k contribution. So in short, catch-up contributions can be applied to the Roth Solo 401k bucket, not the voluntary after-tax solo 401k bucket. So good question. So another question here. I have S Corp and Solo 401k Fidelity. How would I use your service to change my Fidelity plan to allow for loans against it? That's called a restatement. You would complete our online application. You would provide your name, the name of your self-employed business, the original effective date of that Solo 401k plan with Fidelity. We need to know that date, as we need to list that date on the new plan documents that we would draft. Then you would fall under our plan. We would help you to open up new brokerage accounts at Fidelity for the Solo 401k that we offer. That's right. Fidelity provides brokerage accounts known as non-prototype brokerage accounts for Solo 401k plans offered by my Solo 401k Financial. So even though Fidelity offers their own Solo 401k, they do provide brokerage accounts for a Solo 401k offered by my Solo 401k Financial. We would help you to open up those new brokerage accounts at Fidelity and then to transfer your existing Fidelity Solo 401k plan internally and in kind through these new brokerage accounts from my Solo 401k. Therefore, your securities do not get sold and your funds never leave Fidelity. Unfortunately, you cannot use Fidelity's existing Solo 401k. You have to close that and move it over to the Solo 401k brokerage accounts offered by my Solo 401k Financial. But again, those brokerage accounts will be at Fidelity. That's known as a restatement. That's neither taxable nor reportable. Then we would prepare Solo 401k participant loan documents for you. You'll be able to have those loan proceeds wired to your personal bank account. You'll make the loan payments back into the new brokerage account at Fidelity for the Solo 401k offered by my Solo 401k Financial. Great question. Okay, looks like we've knocked out some questions there. Today's topic is how much can an LLC contribute to a Solo 401k plan? Let's get back to our slide presentation here. So again, go ahead and type over your questions and we'll keep on answering those as they come in. Let's get to our slides here. They seem to be out of order here. Okay, so let's take a look at that first slide here. For some reason, our slide stack here is out of order. Okay, so Let's see here. We're gonna have to probably work with what we have here. Unfortunately, this darn slide deck is not cooperating. Okay, so with an LLC, what makes it interesting is that you can elect how you want to be taxed. You can elect to be taxed as an S corporation, a sole proprietorship, or a partnership, for example. If it's a single member LLC, that's typically a sole proprietorship where you file a Schedule C. A multi-member LLC can also be a tax as an S corporation, sole proprietorship, or a partnership. If it's an LLC tax as a sole proprietorship, then from a contribution perspective, the contribution is going to be based on line 31 of your Schedule C. You then have to subtract 1/2 of self-employment income tax from line 31 of the Schedule C, and then you perform the calculation for making solo 401k contributions. If the LLC is taxed as a partnership, then it's going to be based on Schedule K1, specifically line 14, which is titled self-employment income. There's going to be a code A found on line 14 of that Schedule K1. And just like a sole proprietorship, you have to subtract 1/2 of self-employment income tax from line 14 of that Schedule K1 before performing the solo 401k contribution calculation. If it's an LLC taxed as an S corporation, then it's going to be based, the contributions to the solo 401k will be based on your W-2 wages, specifically box 1, which is the gross wages. What's interesting about an LLC taxed as an S corporation is that you don't have to subtract 1/2 of self-employment income tax like you do for a sole proprietorship or a partnership. As a result, you can contribute based on your gross wages, box 1 of your W-2 wages. So it's going to take less self-employment income to contribute because you don't have to subtract 1/2 of self-employment income tax like you do if it's an LLC tax as a partnership or an LLC tax as a sole proprietorship. We've talked about the power of the mega backdoor Roth. So whether the LLC is taxed as a sole proprietorship, partnership, or an S corporation, the solo 401k plan offered by my solo 401k financial allows for voluntary after-tax solo 401k contributions as part of the mega backdoor Roth strategy. And with the mega backdoor Roth solo 401k strategy, that's a way to indirectly get more Roth solo 401k money into your plan. Because typically with the solo 401k, you can only make employee contributions as Roth or pre-tax. If you make them as Roth contributions for tax year 2025, the maximum contribution limit would be $23,500 for someone who's under age 50. You can also do an employer Roth solo 401k contribution, which would be 25% of your W-2 wages if you're self-employed LLC is taxed as an S corporation. But with the mega backdoor Roth solo 401k strategy, it's not a percentage based, it's a dollar for dollar calculation. Therefore, as the example I gave you earlier for an LLC taxed as an S corporation, you can contribute on a dollar for dollar basis. So the example I used earlier was an LLC taxed as an S corporation where you pay yourself $70,000 of box 1 W-2 wages. Therefore, you can contribute that entire $70,000 as a voluntary after-tax solo 401k contribution, and then convert it to the Roth solo 401k or the Roth IRA. So here's an example of the mega backdoor Roth solo 401k strategy. A designated account that's referred into the voluntary after-tax solo 401k bucket, aka a bank or brokerage account. And then you make the contribution into that bucket. So this bucket right, let's see if I can find that bucket here. The bucket labeled voluntary after tax. Let's get to that bucket here. Um, I don't know why this slide deck is giving me so much trouble today. Thanks for your patience there. It's typically not like this at all. Let's get to that voluntary after tax solo 401k bucket. My darn deck here allow me to get to it. Okay, we can't get to that particular slide at the moment, but I did show it earlier. So when you make the contribution, again, we're talking about the mega backdoor Roth solo 401k strategy. So you make the contribution to the brokerage or bank account labeled voluntary after tax. Once it's inside that brokerage or bank account, you then convert that over to the Roth solo 401k or the Roth IRA. And then once you process that conversion, it's got to be reported on a Form 1099-R. Here at my solo 401k financial, we'll issue that Form 1099-R for our clients who timely request that Form 1099-R. And that's used to report the make it back to Roth solo 401k conversion strategy. Looks like we've got a question here from Chip. Let's take a look at that question. Give me a moment here. What is the best corporate structure to use if I earn money selling subscriptions and want to maximize what's in my Roth IRA? It's an LLC tax as an S corporation. So yeah, typically from a solo 401k perspective, it's best if your self-employed business is an S corporation or an LLC tax as an S corporation. Reason being is that it takes less earned income from self-employment activity to maximize your contributions to a solo 401k plan. As I stated before, that's because with an S corporation, whether it's a standalone S corporation or an LLC tax as an S corporation, contributions are going to be based on your W 2 wages from that self employed S corporation. And you don't have to subtract 1/2 of self employment income tax from that box one of W 2 wages. Whereas with an LLC tax as a sole proprietorship or a partnership, you have to subtract 1/2 of self-employment income tax from the calculation. So as a result, you're going to have more self-employment income if your business is not taxed as an S corporation, if you're looking to maximize your contributions. But yes, as part of the make it backdoor Roth strategy, you can solely make voluntary after-tax solo 401k contributions and then convert those to the Roth solo 401k or the Roth IRA. Looks like we have another question here. If this information is helping you feel more confident about your future, please take 1 second to like and subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you to find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. So we're going to get to Phil's questions here in a moment. Here's an example scenario of an LLC tax as an S corporation. Let's say your salary is $100,000. You can make an employee deferral contribution of $23,500. Again, these are year 2025 figures. Then you can also make an employer profit sharing contribution of $25,000. That's 25% of 100,000. That's how we get to $25,000. So if you just want to make salary deferral, employee contributions, and profit sharing contributions, and you pay yourself $100,000, the maximum contribution between those, the employee and the employer contribution would be $48,500. Looks like we've got a question here from Phil. Let's take a look at that. Rental property is bought with both Roth and pre-tax. I think we answered this question yesterday. Can we transact income expenses from one account, let's say Roth, and reconcile 60-40 ratio or monthly? Yeah, so we already covered this topic yesterday, but to answer the question again, yes, you can have the funds flow from the one holding account, so from the Roth account, with regards to paying with regards to income. So if you collect a rent check, for example, let's say the rent check is $1,000, and that property is owned by both your pre-tax solo 401k and your Roth solo 401k fund, 60-40 split. You can deposit the entire $1,000 rent check into that pre-tax solo 401k bucket and then move over the 40% over to the voluntary after-tax solo 401k bucket so that you can account for the percentages based on the ownership, that 60-40 split. Good question. Again, we did answer that question in more detail yesterday. All right. So again, today we're talking about how much can an LLC contribute to a solo 401k. We've been talking about how it's based on how your LLC is structured, whether it's taxed as an S corporation, partnership, or S corp, or a sole proprietorship. And we talked about how it's best if it's taxed as an S corporation because you don't have to subtract 1/2 of self-employment income tax from that calculation. Now, from a compliance perspective, make sure that when you make contributions to the solo 401k, that you have the necessary self-employment income to justify those contributions. Because contributions to the plan are based on your earned income from self-employment activity. So if you don't have enough net self-employment income from your business, you're not going to be able to contribute the full overall contribution limit for the year. And make sure you calculate the contributions correctly. For example, when you're making employer contributions, that's a percentage calculation. Whereas if it's an employee contribution or a voluntary after-tax contribution, that's a dollar for dollar calculation. Also keep in mind that the contribution deadlines are different depending on how your self-employed business is taxed. So if your LLC it's taxed as an S corporation, you have until March 16 of 2026 to make the employer voluntary after-tax contributions. If it's taxed as a partnership, you have until March 16 of 2026. If it's taxed as a sole proprietorship, you're going to have until April 15 of 2026. If you file for a business tax return extension and your business is taxed as a partnership, you're going to have until September 15 of 2026 to make your contributions. Same thing if it's an S corporation. If your LLC is taxed as an S corporation and you file for an extension, you're going to have until September 15 of your 2026 to make your 2025 contributions. If it's an LLC tax as a sole proprietorship, when you file an extension, you're going to have until October 15 of the year 2026. Okay. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.